I hope the screen is visible, guys. Can able to see the screen?
Yes, ma'am.
Yes.
Okay. Thank you, guys. So in the previous session, guys, we had a discussion related to what is bad debts and outstandings. So today let's discuss about the how. So the entire R2R process, like entire accounting process, is divided into two processes. One is general ledger, that is GL, general ledger, and SL, that is sub ledger, guys. Okay. So the entire process is divided into general ledger and sub ledger. So in general ledger, we have P2P and AP, O2C, and AR. Okay. In general ledger, we have R2 guys. Okay. So let's understand the, so because if you want to perform any transaction, very important thing is you need to understand what is general ledger and sub ledger. Okay. See, general ledger is nothing but it is a consolidation of consolidation of all the sub ledgers, guys. Sub ledger. Okay. Sub ledgers. Sub ledger is a Subledger is a individual account, individual account which shows individual balances. Okay, individual balances. See, example, see guys, accounts accounts payable is nothing but the total amount receivable from the trade vendors, correct? So accounts payable is a general ledger. Under that we have various subledgers like vendor A, vendor B, vendor C, vendor X, etc. So all vendor accounts are subledgers. Accounts payable is general ledger. Okay. So fixed asset is a general ledger. Fixed assets is a general ledger. Under that, what is the various types of subledgers we have, guys? Machinery, land, building, equipment, all are subledgers. Bank account is a subledger. Under that, we have various bank like JP Morgan, Standard Chartered, Standard Chartered, Wells Fargo. So like this, like if you want to check the total closing balance of the bank account, if you can check in the bank account. So if you want to see the individual balances, what is there in JP Morgan, what is there in Standard Chartered, what is there in Wells Fargo, we need to look onto the subledger accounts. Guys, understand the differences between subledger and general ledger?
Yes, bro.
General subledger. Okay. So let's see how the AP, P2P and AP life cycle works. Life cycle, life cycle. So P2P is nothing but P2P is nothing but procure to
Okay,
AP is nothing but accounts payable.
payable.
P2P and AP cycle. Okay. So P2P and AP cycle. See, P2P is nothing but it is one of the finance and accounting process which involves in recording of all the journal entries which is related to the purchases. Okay, so P2P will take care of all the purchases in the day-to-day business, guys. Okay, P2P will take care of all the purchases, and AP will take care of all the payments. So both are linked, interlinked. Okay, so both are interlinked. So it is like we will not work on P2P, guys. We are going to work on R2R. But why this particular topic is very important to understand the how the process will work, because we need to know the end-to-end accounting. Okay, so P2P is one of the process which involves in purchasing of goods and services and making the payment to the vendor, guys. Okay, so P2P is one of the accounting process of purchasing goods, services, and making vendor payments. Vendor payments. Okay. So this is the, so let's see what is the first process in that. So the first process is need of product or service. Product or services. Need of product or services. Sourcing and selecting the suppliers. Sourcing and selecting the suppliers. Creating the purchase orders. Delivery, receipt of goods and services. Receipt of goods and services. Okay, so managing the invoices, processing the payments, managing the invoices and processing the payments, guys. So this is the end-to-end process of P2P. So let's understand the step-by-step process, where it will start and where it will end. Okay, so where it will start and where it will end. See, P2P process starts with need of product or service. Need of product or service. Need of product or service. So what is, if you want to purchase something, first we need to identify the requirements of the product. Identify the requirement of requirements of products. That is raw materials or anything whatever it is required for the company operations. Okay, so anything which is required for the company operations, they need to identify the requirements of the product. Okay, so while requirement, so need to prepare detailed detailed report of requirements requirements requirements. Okay, need to prepare the detailed report of requirements. So that is number of products, rate, quantity, etc. So all the details to be prepared. First, need of product or services. Need of product or services. So second thing is, first after preparing the need of product or services, the second activity is sourcing and selecting the suppliers. Selecting the suppliers. See guys, if you want something, what we will do, so first we will identify our requirements. Then the next important thing is, once the requirement is been identified, so the next important parameter is identifying the identifying the suppliers who will deliver that particular product. Okay, so before that, what we will do, we will take the quotations from each vendor. What is the example, if required any product, what is the product cost and what is the total amount. So we will take the quotations. So first is sourcing and selecting the suppliers. Under that, identify the suppliers, seek the quotations, select the best supplier, from available suppliers. Choose the best supplier from the available suppliers. So first is sourcing and selecting the suppliers. Under that, identification of of the suppliers who is supplying that, and seek the quotations. Choose the best supplier from the available suppliers. So then once the supplier is done, Then next is purchase order, creating the purchase order. See, example, you visited the multiple e-commerce websites, guys. What you will do, you will raise, you will verify which one is better. So based on that, what you will do, you will raise the order. So that is called as purchase order. Purchase order is raised by customer to the seller, customer to the seller, customer to the seller. Yes, understand? So purchase order is nothing but it is one of the order which is raised by the customer to the supplier. So you will raise the purchase order or Flipkart will raise the purchase order, guys. You will raise, so you will send a order requisition for I require so and so details. So what is the meaning of purchase order? Purchase order is a formal document, formal document issued by a company to vendor to purchase goods and services. Goods and services at agreed terms, that is price, quantity, quantity, delivery, date, and payment terms. Payment terms and conditions. Payment terms and conditions. Okay. So it consists of what are the various details it will consist of, guys? So purchase order consists of, contains who is the supplier, vendor name, materials and quantity, price, delivery date, payment terms, company code, cost center, etc. Guys. Okay. So these are the various details which is consist in the purchase order. So example, you will raise the order, you will check who is supplying that and how many materials you require, how much quantity, what is the price, when is the expected delivery date, and payment terms. So all these details will be consist in the purchase order, guys. Okay, so purchase order. So here, what is the entry to be recorded? Very important thing, no journal entry will be recorded for purchase order. It's very important technical question. So can you tell me the journal entry for purchase order? So do we have any journal entry for purchase order?
No, sir.
No.
If you make, if you make an order, is it confirmed, guys? No. So for purchase order, no transaction to be recorded. For purchase order, no transaction will be recorded. Very important thing, guys. So no journal entry will be recorded for the purchase order. Just we will send the document. Okay. So that is called as creating the purchase order. And the next important phase of this particular cycle is the receipt of goods and services. Receipt of goods and services. So goods has been delivered. Goods has been delivered by vendor to our company location. So goods has been delivered. So it is also be called as delivery note, guys. It is also called as delivery note. Okay. So once the goods has been delivered, what is the entry to be recorded? Let's understand, guys. So once the goods are delivered, the transaction will be. Now, what is the general entry for purchase of goods, guys? What is the general entry for purchase of goods?
Purchase account data to
Purchase
cash.
account data to cash.
Sorry.
Purchase account data to cash.
Yeah, purchase account debit to cash. So,
Yeah.
but here we will not credit the cash or vendor. We will credit the GR GRIR account. So what is meant by GRIR? GRIR. GRIR is nothing but goods receipt, invoice receipt. Invoice receipt. So it is one of the clearing account, guys. Clearing. So it is one of the clearing account. See why in the real time what will happen? Goods will arrive first. Goods will arrive first, and invoice will come later. Will come later. So to handle the differences, we will part to this particular account. So there are some cases where the details are not matching, guys. So to understand that, companies will not directly post to vendor account. First, they will post to GRIR account. GRIR account is one of the clearing account. Temporarily purpose, this account is maintained. So GRIR is a goods receipt, invoice receipt. Okay. So the next is managing the invoices. Managing the invoices. So once the goods has been arrived to your company location, so vendor will send the invoices to the customer. Invoices to customer. That is our company. So before booking the invoices, companies will perform one important activity, that is three-way match. Three-way matching. So what is meant by three-way matching? So three-way matching is nothing but matching of purchase order, goods receipt, invoice receipt. Invoice receipt. Example, you ordered one Dell, so that understand this. So purchase your purchase order with Flipkart. Understand? Dell laptop. So assume you ordered two quantities at the rate of 25,000 each. So what is the order you made? Is Dell laptops. So the total bill amount is 50,000. So and goods delivered, goods delivered, goods delivered. Here they delivered Dell laptop one, or else take it as two laptops. But here the rate updated as a 30,000. Okay, so the bill is showing 60,000 rupees. And invoice delivered. Invoice delivered. So we got an invoice for the same Dell laptops. Okay, so two laptops at the rate of 30,000. Okay, so what is the purchase order you made, guys? What is the amount you made for purchase orders?
50,000.
50,000.
But while delivering the goods and in the invoicing generation, so the vendor is telling the price got increased. So you need to pay 30,000 rupees for each laptop. So did all three are matching, guys?
No.
No.
Goods delivered invoice receipt is matching? No. So whatever it might be, if the order is confirmed, even it is increased to 10,000 rupees also, there should not be any price fluctuations, guys. Okay. So all the three parameters has to be matched before booking the invoices. So companies will perform this three-way matching. Example, so assume we have in another scenario, purchase order of 100 quantity into 100 rupees. So here 10,000 rupees. So goods delivered. So while delivering the goods, there is no 100 products. While validation at our inventory location, it is showing 9,000, 99. So goods delivered is 9,900. So invoice generated, the invoice is generated for 100 units at the rate of 100, 10,000 rupees. See what happens, the goods is been we ordered for 100, but while delivering the goods we received only 99. There is a one product is missing due to counting miss or any other cases, guys. Due to counting miss or any other cases. So the product is missing. So invoice is generated for 100, So we purchase order is showing 100, but whatever the goods, will you pay for 100 or will you pay for 99 guys? If you
100.
receive 99, if you receive 99
We
products,
pay for
will you pay for 100 or 99?
99.
99.
So whatever the goods are received, that is the final count to the company. So all the three has to be matched. That process is called as three-way matching. Matching of goods received, invoice receipt, and invoice receipt, and this is matching of purchase order, goods receipt, and invoice receipt. The process is called as three-way matching. So very important is what is the so if the details are not matching, what you will do? So you will write, if example you ordered something, the product is not delivered accurately. So will you call to the Flipkart and will you call them and ask the details or not, guys? Will you leave like that itself? Will you pay blindly? Example, you order
Mm.
a product, cost is been they're showing more while making the payment. Will you make the payment directly blindly or will you call to the particular customer care and ask the reasons?
We'll
We have
call
to-
to the customer care and we'll ask the reasons.
We'll ask.
So same way, the companies will not directly do this kind of things. So they will be having three-way matching. So what is the importance of three-way matching? So three-way matching importance is so improved accuracy in the payments. So if any kind of frauds, like while delivering goods, it will be protected. So cash management will be better. Enhanced supplier relationship. If anything is been mismatched, we will reach out to the supplier so that our relationship will continue more, and compliance order auditing, cost savings, operational efficiency. So this is called three-way matching, is matching of purchase order, goods receipt, and invoice receipt. So why it is very important to understand any kind of frauds or anything which is happening. So before booking the invoice, we need to record this. We need to do this three-way matching. Companies will perform the three-way matching. It's clear? Understand? So once done with this, guys, invoice generation will happen. Invoice generated. Okay. So what is the entry we book for the purchase of goods purchased to GRIR? Now, what is the entry to be booked in the books of accounts? GRIR. We validated three-way matching, purchase order, goods receipt, and invoice receipt. All these three are matching. Now we can process the invoices. That is GRIR account debit to vendor account. GRIR account debit to vendor account. Final impact will be purchased to vendor only, guys. But why are we booking to the parking account? Why are we booking to the clearing account, guys? To understand any major differences. Guys, understand? What is the first entry we book, guys, here? While doing the purchase goods receipt, purchases account debit. Which account is credited, guys, earlier?
GRIR.
GRIR. Now what is happening here? We are crediting GRIR account and debiting GRIR account. Both is getting knocked off. Final impact will be purchase to vendor account. Clear?
Yes.
Why are we parking these balances? To understand any major differences in purchase order, goods receipt, and invoice receipt. Clear? Guys, understand, guys?
Yes. No.
So next is managing the payments. Managing the payments. So after identifying the company, everything is accurate. There is a due date. According to the due date, company need to make the payment to the vendors. So payments are two types, guys. Payments are two types. One is part payment, full payment. So what is part payment? In the company, they used to call us part payment. That is
Partial payment.
partial payment. Partial payment. So full payment in the sense, full settlement. There is no any balances left out. Full settlement. See example, purchase of goods for 1,000 rupees on credit. Payment made to vendor 500. So is it a partial payment or full payment, guys?
Partial payment.
Partial payment.
So we need to make the payment in the future again. So we need to make the payment again. So another example, purchase of goods per 1,000 rupees on credit. So payment made to vendor 1,000 rupees. So is it a partial payment or full payment, guys?
Full payment.
Full payment.
There is no any differences, guys. So these two partial and full payment, guys. Partial payment and full payment. Okay, understand? So this is about the partial payment. And so while making the payment, what is the entry we will record? Journal entry for the payment. So which account is credited earlier? If you make the payment to vendor, what is the entry, guys? You purchased on credit, you are making the payment. What is the entry?
Goods account data to vendor.
Sorry.
Goods account data to vendor account.
While
Purchase
making
account data to vendor account.
Vendor account data is the cash.
vendor account debit to bank. Okay, vendor account debit to bank. So by this first stage is, so tell me what is the from where the entries will start, guys? Did we start while identifying any goods and services? Do we have any transaction? So the first stage is identification of
Aspects.
Requirements. Do we have anything to be discussed? Any entry to be posted here? No entry. Then the second important stage is like selecting and sourcing the suppliers. So that is selection of suppliers. Do we have any entry here, guys? Any general entry to be posted? No. So the third stage is purchase order. Do we have any entry to be posted here? A purchase order, is there any entry, guys?
No.
Just now we discussed.
No.
So then
No.
managing goods receipt. The next stage is goods receipt. So what is the entry to be recorded here if the goods are received? Purchase account debit to
Purchase account data to
GRIR account.
GRIR account. Next stage is invoice receipt. So once invoice is received, what is the three important parameters we will compare? Purchase order,
Order.
goods receipt, and invoice receipt. So what is the entry to be recorded here? GRIR
GRIR
account,
account data.
your account data to
Purchase.
vendor account. So the next stage is payment processing. Payment processing. While making the payment, what is the entry? Vendor account debit to.
bank
Bank
account.
account.
Bank account.
So these are the three entries to be remembered, guys. Okay, for the interview purpose. Clear?
Okay.
Sure.
Understand, guys?
Okay.
Okay. Yes, understand?
Yes.
So this is the three entries which to be remembered, guys. This is the three entries to be remembered. Okay, this three entries to be processed. Okay, so next is O2C cycle, guys. O2C and P2P cycle. Sorry, O2C and ER cycle. So O2C is nothing but order to cash gets. So now we discussed when we are purchasing. Now we will discuss what we are going to sell the products. So O2C is a O2C and ER process life cycle. Yes, this is the technical questions. Many times the interviewers ask the questions. So that is the reason we are spending an extra class to understand what is the nature of what is the nature of transactions which will happen, guys. Okay, so it is one of the accounting process from receiving a customer order to collecting the cash and recording the revenue. Recording revenue. So it is includes the details. See, what is the complete journal entry? So what from where it is being started and where it is being ended. Okay. See, purchase order starts with the customer order, guys. So example, assume you have been ordered something. Okay, you have been ordered something. So for the customer, you are a customer, company is a seller, correct? So if the company will receive the order, will give the order, guys. So first cycle is receiving the
Receive.
receive the order from a customer. First cycle is receive order. Then what will happen? We will fill the order and ship the order is nothing but deliver the goods and create a invoices and receive payment, receive payment, record payment, receive payment and record payment. So first stage is order received. Order will be received from the customer. So once the order is received, what is the journal entry to be recorded is there any journal entry? What is this order received? This order is also called as what type of order, guys? It is for you are a customer, for you it is a purchase order. For company it is a sales order, guys. Okay, for company it is a sales order. Guys, for you, if you're purchasing something, example, you have been ordered something in Flipkart. For you, it is a purchase order. For company, it is a sales order. What is the what it is called as, guys? Sales order. So it is a formal document created when a customer places an order for goods and services. So if a customer places an order, so that is called as order received. So what it contains? What does the sales order contains? Same, what are the things which is contained in the purchase order that will be contained in the sales order? So who is the customer? Customer name and material, quantity, delivery rate, delivery date, payment terms, okay, any tax details and shipping details, the mode of shipping, whether you are shipping through air, rail or any transport. So all these details will be considered, guys. Okay, so who will issue the sales order? Sales order will be issued by company to the customer. So sales order does not, so important things. So sales order does not have purchase order and sales order does not have does not
Journal entry.
does not have journal entry, guys. Journal entry does not have journal entry. You understand? So sales order does not have journal entry. Okay. So this is about the sales order, guys. Order received. So the next is fill order. So fill order in the sense whatever the order is received from a customer, arranging the goods as per the sales order. So there is no any transaction here, guys. There is no any transactions here. So and once the ship order is been done, that is delivery of goods. Okay, ship order. Ship order. So once this delivery of goods is been done, okay. So what is the good when the goods are dispatched? Goods are dispatched. Goods are dispatched from the companies, from the companies, this thing, from the company's standpoint. So what is the entry to be recorded once the goods are delivered? So we need to record cost of goods sold account debit, cost of goods sold account debit to inventory account. So what is meant by COGS, guys?
Cost of goods sales.
Cost of goods sold.
Boost.
So why are we recording this? So you want to know what is the total profit on the particular sale. Example, we will take one product. So what is the product of profit of that particular sale? We can use from this particular entry, guys. Cost of goods sold account debit to inventory account. Okay, because inventory is moving out of from the company and cost of goods sold is an expenses to the particular order. So once that is done, creating the customer invoices, creating customer invoices, creating the customer invoices. So while creating the customer invoices, what is the entry to be debited is customer account debit to sales account. What is the entry, guys? Customer account debit to sales account. So once we created an invoice to the customer, customer will validate and he will make the payment. That is receipt of payment. Receipt of payment is the final stage. So once money is received, bank account debit to customer account. Is understand, guys? It's clear. What is the transactions to be recorded from beginning to end? Understand, guys? It's clear about O2C process.
Yes, sir.
Now let's discuss about R2R process, guys. R2R process. So R2R is nothing but a record to report. R2R process life cycle. Okay, life cycle. So R2R is one of the finance and accounting process which involves in collection of financial data and analyzing of financial data and delivering the efficient financial reports to management. Okay, management. So this is the R2R is one of the finance and accounting process which involves in collection of financial data, analyzing of the financial data, and delivering the efficient financial reports to the management, guys. Okay, so R2R will be collecting the data from whom? The data will be collected from the subledger systems. The data will be collected from the subledger system, guys. The data will be collected. So R2R involves in collection of the financial data, analyzing of the financial data, and delivering the efficient financial reports to the management, guys. See, from whom the data is getting collected, the data will be collected from the subledger systems like AP, AR, P2P, O2C. So once the data is collected, so what is the process will be followed once the data is collected? So R2R team will analyze the various set of data. Okay, so what is the general entries to be posted? Okay, so what sort of journal entries to be posted? So R2R team will analyze that process and finally it will deliver the reports to the management, guys. Okay, see here actual data from subledgers like KP, AR, invoice processing, etc. And actual data from the third party who is collecting the data. General ledger team is collecting the data. Who is the general ledger team? R2R team. So after collecting, what they're doing, transferring the data into meaningful, strategic, financial, and operational performance indicators. So once the data is being collected from the, so here I told you, R2R is one of the finance and accounting process which involves in collection of financial data. So the financial data will be collected. So after collecting, what is they doing? They're analyzing the financial data. What is the analysis they will do? They will understand what are the prepayments, what is the outstandings, what are the pending payments, what is the depreciation to be done. So like this kind of entries to be understand and processing in the system. And once it is accurate, the companies will deliver the financial reports to the management. Okay, R2R is one of the finance and accounting process which involves in collection, analyzing, and delivering the efficient financial reports to the management. See the step-by-step process, what it involves. So the first stage is data collection. From whom the data will be collected? The data will be collected from the subledgers. So once it has been collected, what they're doing? Data recording. That is recording of financial adjustments like accruals, prepayments, FX revaluations, outstandings, reclassification entries. So once it has been done, they again validate the data whether it is accurate or not. So once it is been done, ledger maintenance, the close will happen, consolidation, and financial reporting. So this is the end-to-end process of R2R process, guys. So till now we discussed only data recording process. What is that? Recording of financial adjustments like we discussed about the accruals, initially accrued expenses and accrued revenue, prepaid expense and deferred revenue, reclassifications, fixed asset capitalization, fixed asset depreciation, fixed asset disposals, and we discussed about intercompany transfers. When a transaction is moved from one entity to another entity, what is the interest to be recorded? That we discussed. And finally, we discussed about bad debts, provision for bad debts, outstandings. So these are the various details which will record in the financial adjustment case. So once it has been done, the data validation will be done, and finally the reports will be generated. It's clear. This is just today's session is completely because of your just for the knowledge purpose, guys. Okay. So in the today's session, very important thing is P2P life cycle journal entries, guys. Okay. Can you explain me the P2P life cycle? Even you are not part of P2P, but they want to know what is the sequence of transactions to be posted from the P2P standpoint. So do we have any journal entry for P2P for purchase, guys?
No, sir.
No.
Purchase
Yes.
order, do we have any journal for purchase order? Do we have any
For
journal?
purchase orders, we don't have.
No. Once the goods are, what is the entry to be recorded? What is the once the goods are delivered? What is the entry to be recorded, guys?
Purchase account data to GRIR account.
GRIS.
Once invoice is received, what is the entry to be recorded?
GRIR account data.
GRIR account refers to vendor account.
Vendor account.
GRIR account into vendor account.
Vendor account.
GRIR is a clearing account. GRIR is a clearing account. Okay, understand? GRIR is a clearing account. So for what purpose this clearing account is used, which is mainly maintained for understanding the any kind of differences. Clear?
Yes.
Yeah. So then once making the payment, what is the entry to be recorded, guys? While making the payment, what is the entry to be recorded?
Vendor account data to bank account.
Sorry.
Vendor account data
Vendor-
to bank.
Vendor account data to bank account.
Bank account.
In terms of O2C, so the one while once the goods are delivered, what is the entry? COGS, that is cost of goods sold to inventory account. So while making the payment, while generating the invoices, customer to sales account. While receiving the payment, bank account to customer account. Clear, guys? Yes, understood. So this is the sequence of transactions which companies will process in the day-to-day business, guys. This very important technical that is P2P life cycle guys. Many times the interviews test our knowledge on the P2P process, where it will start and where it will ends. Okay, clear? Yes, understand guys? Okay, guys. So this is just a brief about the process, and any doubts guys in this? If any doubts, do highlight me, or else we will wind up and we'll meet for the day-to-day sessions, day-to-day activities in the tomorrow session. Okay.
Okay, sir.
Okay, so thank you.